The panel is all about ensuring inclusion as we move towards a cashless future in North Africa. The panel is moderated by Ms. Danielle Lawrence, the Interim Chief Operating Officer for the Fintech Association of South Africa. Danielle, if I may ask you to join us up on stage. Please show your appreciation to Danielle. She joins us up on stage. With her, we have Mr. Maher Mikati, the Chief Executive Officer from Areeba, as another speaker to join us up on stage. Please join us. You may please take a seat. From South Africa, we'd like to welcome to Egypt the Chief Digital Officer for CIB, Managing Director of Digital Banking for CIB Bank Egypt, Jacques Meyer. Welcome to Egypt, Jacques. Another South African, we got 3 South Africans over here. Darren Franks. Oh, yeah, you're British. I'm sorry about that. You're British because you stay in South Africa, right? So, Fintech Association of South Africa's interim CEO, the co-founder and director, Darren Franks, is with us as a speaker panelist. Thank you for joining us, Bahaa Farouk from Banque, Misr, the head of engineering for Banque Misr Digital Factory. He too is one of the speakers, so please join us up on stage, Bahaa. And last but not least, Mr. Ayad, the head of digital payments for Al Ahli Bank of Kuwait or Egypt. He is with us. So, ladies and gentlemen, please take your seats, and the show is all yours, Danielle. And in fact, there are 3 microphones on the table, so gentlemen, you can share a mic. Amr, you have a label mic with you. Danielle, you 2 on the label, so over to you.
Hello everybody, so a warm welcome to our panel discussion today. I think it's going to be really exciting. So to start off, I think let's just cover one thing here. Whilst going digital does have many advantages, there are definitely challenges that need to be addressed. And hopefully our panelists today are going to be able to shed some light on some key issues as well as the strategies that we can put in place. But they are not the only ones that should be doing the talking. I'm sure you've heard this numerous times today. But we want to have this to be quite conversational, and we'd love to hear your insights and input as we go along. So if you have anything that you'd like to share, please let us know, and our panelists will do their best to answer those questions. So we have everyone introduced, and you know who our speakers are. Let's get straight into it. So Darren, I'm going to pick on you first. We need to start with a burning question, and that is, what are the potential benefits of transitioning into a cashless society in North Africa?
I think there are numerous. I think financial inclusion being one. I think it's slightly easier to reach a wider population if you're digital rather than you're physical in terms of branches. Secondly, I think for cost and security, there is a hefty cost in transacting in cash, albeit perhaps that the public don't see that cost. There is, if you think about transportation and printing and everything that goes behind the scenes when it comes to running cash. So there's the security side. I think there is obviously the regulatory side as well. Again, not potentially looking at it from the consumer, but certainly from a central bank perspective or from a bank perspective, if they can have more clarity and oversight in terms of the currency that's being used, I think that's also another objective. Whether that's a North African thing or whether that's more of a kind of a global or developing markets, I think it probably is. I don't think it's necessarily specific to North Africa. I think that's very much about emerging markets in its entirety.
Okay. Ahmed, I'm going to move to you next. So taking those benefits into account, how do you think we can encourage consumers to actually start using digital payments, specifically in markets like North Africa?
Yes, okay. In order to let the customer use the service, you must engage more the customers. You must have like a cloud of services to be offered to the customers. There, like not only for bill payments and all of this, you must also push a little bit regarding the acceptance of the payment in the market here. You know, people when they are engaged more, they will ask about it more. So you must be on ground with the merchants. You must also avail payments, even e-commerce. When the customers will see, for example, the QR code that the merchant, they will ask about it, or they will ask what it is. So they will be engaged, so they will be encouraged to use it more. So to encourage customers, you must have a lot of services to be offered to the customer in order to convince him to use it. Not only the services, service also must be secured, well secured. Services also must be up and running technically, very good and technically. A very good infrastructure should be done here also in this in all countries. As well, also banks must go to the customer more. You must not wait to the customer to come to your branch in order to register. You must go do the activation campaign, go to the customer and convince the customer. Because they still don't know, they still trust only the cash. They trust only to have the cash in hand and pay in cash. So when you go to the customer, they can find it everywhere, so they can use it after that.
Sure. Bahaa, let's stick with this topic. So because cash is physical, can be seen, touched, smelt, you know, people have this faith in cash. Do you think that there is a way in which we can encourage people, from your perspective, to put that same level of trust, not anymore 10 years from now, but now, into digital currency? What's your thought on that?
Yeah, so thank you first for the good question and for the first feedback coming from my colleague in the panel. Second, I think there is too much to do. The first, there should be a kind of incentives that comes from the payment, the digital payment providers. So definitely with some kind of incentives, it would encourage big times. This is the first. The second part would be feeling trust. That is, whatever kind of transaction that they would do, either by a digital payment or a card or whatever, it would be that secure enough. I can get back a refund easily. I can track what's going on. So it has to be traceable by a mean or another. The third, it is a convenience journey. So it could be digital payment, but to achieve that, it's very difficult to be done. So as much as it is convenience, it will motivate the consumer to do. Yet, it doesn't mean that by having all of the three parameters, secure or trusted, convenience, and traceable, that we will get rid of the physical cash. There is too many other activities from the bank sides, from the regulators, and definitely the banks would have to, from my view, to have two pillars or two responsibilities. The first, to motivate more, and also to play with the fintechs as enabler and as a backbone. So yes, banks should do more as a banker or as a banking institution, but also have to play another main function to enable fintechs in a better way.
Very, very valid points that you raised there, Jacques. So further to those points, do you think that there are solutions to this trust in digital currency or perhaps learnings from other African countries that we can bring to North Africa to help kind of encourage a cashless society?
Danielle, yeah, thank you for that. I love that question because I always held that view that says, we must try and learn as much as we can from people who came before us. And you could go across the African continent. There are numerous examples of people who've gotten stuff really right, but there's two angles to that question. It's not just what you can learn from people who got it right. It's also learning from other people's mistakes and not perpetuating those.
Yeah.
And I know the classic example is always M-Pesa in Kenya, and what they've achieved there. But I like to dig deeper. M-Pesa has been tried in other markets and it failed. for very valid reasons. And if you dig a little bit deeper, what M-Pesa got right was the concept of proxy payments. And what I mean by proxy is that they made your mobile phone number, your address, your account number. And that demystified banking for many people. They didn't have to worry about branch codes and about sorting codes and about routing and about this and that. They went to their mobile phone number and paid their friend. So forget about the M-Pesa user interface, take the idea of proxy payment. If you look at that, I think there's great examples in, Egypt, InstaPay has done really well. Same concept. You've got the same example in South Africa now with PayShop, where it's all about proxy payments because that kind of, demystifies the whole thing. And I think that helps people develop trust, where they know, this money is going to that phone number. And that phone number belongs to their friend. So I think that's a great example to use. And I guess the other bit around trust is also, I guess it's born by the need. So I think a lot of markets, and I think Egypt is guilty of it as well, don't price cash appropriately. Cash in Egypt is free, pretty much. Whereas cash is probably the most expensive payment mechanism if you were to fully price it.
Yeah.
So the incentive is not there for the consumer to move away because it's free. There's no cost to me to move around with cash, to give cash, to take cash. Whereas with the banking industry, cash is an enormous expense. And if you look at markets where cash is priced appropriately, you will see that, the sheer cost differential moved people, that sort of reluctance to adopt something digital moves away because it's driven by, it's better for me, I save money. So I think there's also something that we should look at, regulation plays a part in this. So appropriate pricing, regulation, and also you've mentioned convenience, like my example of proxy pay, that's convenient for the consumer.
Yeah.
It's just being creative about these things that I think that helps a lot.
Valid points. Maher, I'm interested to hear your thoughts on this. So perhaps all of the comments we've had so far from the panelists are how the broader market can kind of get involved in creating this trust. But what about sectors such as government or private companies or civil societies? How can a partnership between those players be fostered to promote this sort of collaboration and address the inclusion challenges specifically amongst consumer trust in digital currency?
First, thanks for having me on this panel. I believe that for financial inclusion, you have to go back to the oldest trick in the book, a carrot or the stick. A carrot being an incentive, a loyalty program, a reward. Or a stick is where regulation comes in and obliges people to actually adopt cashless payments and financial inclusion. In my experience and from what I've seen in this part of the world, there are a lot of successes where a stick has been used, and these are the success stories today. And even in Europe, if you look at the adoption of cashless mechanisms in Europe, they were all obliged or enforced by a regulator that came in, obliged banks to open their APIs, obliged banks to open their data to everyone, and hence open banking became mainstream. Otherwise, if it was up to a bank, they will never open, and I'm sure my fellow panelists would agree, they would never open their APIs. So, in my opinion, regulation comes first. A regulator's job should enforce cashless payment. There's a lot for governments in enforcing. Government should be the first to be motivated to pursue such strategies, because that's a way to have traceability, to be able to collect taxes. The advantages are obvious, but and if you look at, for example, in Egypt, they started doing that a few years back. No government payments above, I think it's 500 Egyptian pounds, is allowed to be done using banknotes at any government or semi-government entity. So I believe the stick is the best approach, in my opinion.
Okay, that's interesting. Darren, I'm coming back to you on this. So we've now heard from Jacques what we can take from other African countries. We just heard from Maher about, some things that worked in Europe. I'm curious, do you think that there's an opportunity for interoperability between global markets, so specifically European markets, and Africa, specifically towards that cashless society, specifically because that would be more developed countries versus developing? What do you think of that?
I think I agree with, well, no, I don't think. I do agree with what Jacques said, that you'd be foolish not to learn from others, what worked and what, more importantly, didn't work. I think taking some technologies, perhaps into emerging markets, is definitely something to be looked at. However, a cookie-cutter approach is not the one to look at. So you can't take something that's worked in one market and put it straight into another market and expect it to have the same results, aka M-Pesa, as Jacques mentioned, attempted I think twice in South Africa and didn't work. But it's hugely successful in other markets, and I think we'll see what happens in Ethiopia over the next couple of years. So I think there's definitely learnings you can take, and perhaps processes or ideas, but it's vitally important that you take those and apply local knowledge and local market insights, because as I said, what works in one market doesn't work in another. Just one thing I just wanted to add, if I may. That term open banking, I can't stand that term open banking. I think we're all trying here to talk about consumer confidence, and for me, open banking, the term is a bit of an oxymoron, right? A bank should be something that's secure and safe. Right? That's what I believe. When I was growing up, and my children growing up, and you ask them to draw a picture of a bank, they draw a safe, and they draw it, and that's it. That's a safe place for my money. And then you're talking about opening it up. I don't know. I think there's another term, but that's one for another day.
So I didn't come with it. I didn't come up with it.
No, I wasn't accusing you. I promise.
Yes, go ahead.
I may comment on the same point regarding the open banking. Yes, it's struggling. It's not that easy to have such approaches, especially in the emerging markets. Especially the regulation is not that easy. However, I think what we have to all do is to start small. We have to have an MVP. We have to have an initiative, even if it would be like a whitelisting for specific use cases to enable Fintech, or maybe whitelisting integration. Yet it's not 100% open banking, but it's enabling the open banking when it's being regulated. But I would encourage that is all banks in Egypt to start their journey to be familiar and ready for the open banking by a very specific use cases, either enabling fintech or integration with maybe corporates and business.
I'm going to come to Amr quickly, actually, on that topic. So I'm going to reserve my own opinion, but I'm curious to hear from your side, considering you're in a bank. Do you think that the banks are necessarily ready or interested in changing the minds of consumers towards digital payments or digital currencies? Or do you think that the banks kind of reserve their right to believe exactly what Darren said, and that, we are the safe place and going anywhere else is detrimental to the consumer?
Yes, banks start now working on it, but I think it's something regarding the mindset and how we can think about the digital payments in the banks. They must think about it as a strategic project, not only as a profit center, because all banks, the first thing they think about it, how can I gain money? So I think in this stage we have to work on it as a strategic project, and how this will by the time I will gain money, and by the time I will change the society. We are in the adoption phase now, so I have to invest more in this, and I have to think about it as a strategic project and go with the central bank's strategy and abide by the regulation, and by the end of the day they will do it, inshallah, I hope.
Okay. Maher, on the topic of concern surrounding alternative payment channels, specifically cashless payment channels, not being as secure as the banks are and were traditionally, what measures do you think can be implemented to protect the consumer from fraud or scams or any other risks that are usually associated with digital transactions?
I mean, there's a lot of different measures that were introduced, technologically speaking, using two-factor authentication or 3D secure, and the list can go on and on. However, I would like to argue, is cashless less secure than cash? People take cash for granted. I believe my colleague just mentioned this. If you look at the inherent cost for cash, the cost of storing, the cost of, you probably get counterfeit notes, the cost of insuring cash, the cost of transporting cash, we take that for granted. However, I would like to argue that cash is less secure than cashless.
Okay. All right, so Jacques, if we're talking about moving away from cash, that obviously means that although a few things have changed, a few other things still need to change or be reinvented, such as KYC, risk and compliance, the actual digital currency used. Would movement away from traditional digital currencies, let's say like the dollar, have any impact towards a cashless society in North Africa? Do you think we could be more unique in the type of digital currency that we use?
It's kind of an interesting question. I'm kind of arguing in my mind about this because, in one way, I believe digital currencies, do present some sort of future for us. But on the flip side, the whole, Bitcoin, Ethereum, and everything else world, which I think most of us have dabbled in or looked at whatever else, I don't think is the solution. I don't think they have cracked the model yet, in terms of adoption and trust and whatever else and so forth. So for me, the key thing is, is there a solution or a space where, everybody in this room who's from Egypt, have felt the pain of the dollar, of the Egyptian pound devaluation. And everybody who's in Kenya have felt the pain of the devaluation. Everybody who's in Argentina have felt the pain of devaluation. Everybody who's from South Africa have felt the pain of the last 2 weeks, So that sort of, I think a part of getting customers to embrace digital, is if you can present a value proposition that sort of de-leverages their exposure to their currency. If you ask anybody in this room is from Egypt, the big question that you ask is, where can I get dollars?
Yep.
How can I get out of my own currency? Now, unfortunately, we know the way the dollar, and there's lots of press and articles around about, moving away from the dollar right now. Lots of countries want to move into direct settlement, between their own currencies, or they want to adopt a third-party currency other than the dollar. Unfortunately, we are where we are. 90% of global trade still happens in US dollars, and it's priced in US dollars, and that impacts all of us. So, and if it's not dollar, what else is it? Well, is it the pound? With Brexit, not sure. Is it the euro? Well, that's a zero growth market, an aging population, not sure. It's not the yen, is it the won? Is it the ruble? So you kind of go down that, and you almost want to say, well, it's none of those. If you're gonna be doing that, you got to invent something which is different. I guess in some ways tied more to, the North African market. So I must admit, I don't have the answer. It's a fantastic problem and a fantastic question, but it's going to take a lot more than 6 people on the stage to solve that problem.
Good point. Maybe someone from the audience at this point, other than the 6 of us, have some inputs they want to make on that particular question?
Good afternoon, everybody.
Afternoon.
As noted that unbanked segment is not visible for the banks. So the problem is how to attract, what is the action plan for banks to attract those segments, those customers, to have a bank account, especially that those people actually is presenting in Egypt about 70% from adult population. So they have no trust in banking system because it's very expensive. As long as they out of the range of product personalization for banks, they cannot perform any transaction without cash. What is the action plan for banks to penetrate into this market?
I actually want to use an analogy that I think is very apt for this question. I mean, 20, 25, 30 years ago, when mobile phones came about, you know, I mean, and Vodafone and all these companies in Europe, you know, kind of went into the market. The model was very similar to the old-style traditional landline, where you opened an account and you used your phone, and then you got a bill at the end. And the only people who could get mobile phones was people who were creditworthy, because that's the model. And then, you know, a bunch of people around the emerging markets, you know, and there's some very interesting examples in Africa as well, you know, had this concept of the prepaid phone. And, I mean, it's well documented. The big global telcos didn't see it. They just didn't see this model working. Nowadays, you know, prepaid is the dominant form of mobile telephony around the world. I mean, there were multi-billion-dollar companies being born in Africa. Yeah, most of them have been gobbled up by Orange and by Etisalat and by, you know, I mean, Vodafone and so forth. But people saw, to your point, you know, I mean, where the big corporate, the big telcos, and I'm talking about the big banks in this analogy, didn't see the emerging market or didn't see that underserved customer. You know, there were people who saw that and invented a business model that allowed access to the service to those people. Now, when I pull that back to banking, yes, banks, and it's interesting here, banks don't see it. Telcos have seen it. So the same telcos who missed the whole prepaid thing saw the financial services in the underserved market. I mean, they're out there with wallets. They're out there with, you know what I mean, with transacting products. They're out there with payments. They are out there with all of the things that consumers want. And it's being embraced. If you look at, I don't want to use the example again, but I mean, Vodafone in Egypt sits with, I guess, double the number of customers on its wallet than the entire banking system, you know, in Egypt has account holders. That's just one example. You know, you go to Kenya, where, you know, I mean, the banking population is maybe 2, 3, 4 million. The people with M-Pesa accounts is 40 million. It's 10 times more. So you know, I mean, if you want to see how we need to reach those customers and what we can offer them, look at what they currently have. And then you have to reflect and say, have we missed the boat? Has their need already been met? You know, because, you know, the ability to store value, the ability to make payments, the ability to receive payments, the ability to do all these things has been met by somebody else who, you know, happens to be the telcos. So I think we can learn from that. And I think you mentioned previously that we need to go out, don't sit back and wait. I mean, if you look at one of the banks I was part of the founding team of in South Africa, you know, which is a bank called Time. Very interesting model. That bank grew to 7 million customers in the space of 4 years in a banking market that's 80% penetrated. And the trick there was they did exactly what you said. They invented a different way of reaching the customer, which was through a very simple, low-cost kiosk in a place where where there's foot traffic, supermarkets, train stations, bus stations, and, you know, customers like that. Customers embrace that. So even though it's a pure digital bank, the onboarding is done at a physical device because that captures the attention, and that, you know, and so I think you know, in short, I think the answer is the market is there. You have to have the product that goes into the market, and you have to have the distribution model to reach the market. And I think that's where banks fall flat, because we still base our distribution around our branch networks, which is very small compared to the reach you can have with a different model. Once again, if you look at the telcos, I mean, the banks here have 100, 200 branches. The telcos have what, 1,000, 2,000 outlets? You know, it's much more approachable.
Thank you, Jacques. I have one more question, and I'd like 2 different answers on this, maybe 3 actually inputs. Darren, Bahaa, and Maher. So, Darren, let's start with you. Do you believe that KYC should be reinvented to give those in vulnerable communities the opportunity to become kind of absorbed into this new world we're going into? You know, a lot of people, specifically in South Africa, don't have an address, per se. So how do they enter into this environment if they can't be KYC'd? Do you think that it should be reinvented? Before you answer, Bahaa, I'd like your opinion on that as well, from a North African focus. And then Maher, further to their answers, I think I want to know if we can protect those vulnerable communities from, let's say, fluctuating currency prices, something that Jacques touched on as well, and how we could do that. So let's go in that order.
Okay, thank you. I think if you'd asked me half an hour ago, my answer probably would have been slightly different, but I had the pleasure of having an informal chat with Jacques outside, and he was talking about the sort of the regulatory challenges that are certainly here in Egypt. And the simple answer is yes, absolutely, of course. It would help massively. It would remove a lot of the friction. It would allow a lot of the unbanked to become banked, should they choose to, going back to the question a bit earlier on. But I understand the complexities around doing that, and it's not just a light switch moment. I think there's a lot of work to be done with the regulators here in Egypt, and perhaps slightly broader across the continent.
Thank you, Darren. So I would like to link between your question, Daniela, and our colleague there question. So I would start from the question there for the unbanked customers, and what is the kind of responsibility on the bank sides to encourage them to be banked. I would ask a different question. What is the main driver for either a consumer or a business to be banked? This is a main question that banks should answer. If they manage to have an answer for that, so it would be easy to hook such kind of consumers, either it's consumer or maybe a business. Definitely, a QIC, a simplified QIC process, an eKYC process, or even a digital onboarding, which could come into iteration. So, for example, in Banque Misr, we launched our digital onboarding, which is yet not 100% digital onboarding, and it's pending on a wet signature on the branch. Yes, definitely it's not a digital onboarding. There is no a kind of an eKYC, but at least we removed the rubbish of data that the customers used to fill in branches. We are automating the data filling and reduced the time in the branch from maybe 15 to 20 minutes for opening an account to be 2-3 minutes to get the wet signature. And for the business, it can be done on the premises of the business itself. So such a kind of convenient experience, it could be a good motivator for them, because they manage to have such a kind of opening accounts or similar, such as wallets, as you mentioned, for M-Pesa or Vodafone wallet, an easy way. So banks should be relaxing and releasing a better way for opening accounts, either for business or consumers. Thanks.
Maher?
So just on the KYC thing, again, going back also to regulation, I believe that government-sanctioned digital identity or having a unified identity is a prerequisite to a lot of this. And if you look at, certain use cases, for example, if you look at India, they've launched their digital ID called Andar. They've had a historical high number of onboarding in record time, and it was a prerequisite for financial inclusion, for the payment banks, for the unified payment initiatives that they've done in the country. Now going back on the Forex part, I'm not sure I'm a specialist on this. I'm Lebanese. Lebanon has gone through its own fair share of devaluation at a much more severe rate than Egypt. I don't think there is any digital tool that could protect users from hedging or dealing. It is at a macro level at the end of the day. It has to do with a lot of balance of payment. It's a countrywide issue. I don't think there are any digital ways to circumvent this, unfortunately.
Okay, we need to start wrapping this panel up, but I'd like to just ask the audience if there's one or two questions that you'd like to ask our panelists on any of the topics that we have discussed today.
So we were expecting very low traffic to such a kind of a digital lending, whereas the customer would be filling too many fields, uploading some documents, legal documents, commercial register, tax registration entry, also uploading financial statements, and so on. Definitely there is a lot of integration happen in the background. We were surprised that we are getting too many requests from the customer immediately after we launched it and we announced such kind of product, which has also encouraged us to enable the same product for the new to bank. So in the same process, if you are still not yet a bank customer, you are not yet having your own account inside the bank, you will be uploading the documents, filling the forms, and you would have an SLA between 3 to 5 days at most for finalizing the documents workflow, internal workflow processing for both the onboarding, finalizing the onboarding, opening account, as well as the lending process. So I think we are concerned too much of the consumer behavior for the business education level, and it's not the case. They are really ready, and we can recognize that from their behavior on wallets. As Jacques just referred to Vodafone, it has been launched years ago. In Visa in South Africa, it has been launched years ago, and the success ratio is very high. The process is very easy. Everyone today, even the not well-educated people, they are using smartphones in their daily life activities. So it's again how we are approaching them and what kind of journey that we are approaching with. Is it that simple? Is it that clear for them to do? Is it that smart enough? And what kind of after sales or after process that we are dealing? Is it just getting the product or getting the imported or having granted your loan? Or there is a follow-up? What kind of cross-selling activities that you are doing also? So again, it's about how you are utilizing the technology and the tools in hand to present and offer the best-in-class journey for such kind of consumer. But again, from experience, 2 years ago, the conversion ratio from branches to digital lending, it's too high. It's exceeding, without any confidentiality, more than 50%. So it looks like the society is waiting for us. We have to be that, again, in a hurry and accelerate our products as bankers for sure, and as fintech solutions.
I just want to make 2 comments on this as well. I mean, first of all, I don't think education of consumers should be focused solely on unbanked. I think it's equally valuable to educate, the completely banked consumers. And I mean, I've got an example I want to use. One of the banks I was part of, the team that built that bank, Discovery Bank in South Africa, has got a program called Vitality Money, where, the whole concept is to kind of, we've done lots of research, distilled it down to like there's 5 key, areas you should measure, it's savings, it's protection for events, it's property ownership, it's, making provision for retirement and so forth. These 5 things, basically define financial stability. And empirical data has proven that, customers that score high on this measurement tool, are less likely to default. In fact, if they are on the top level, we in 4 years of operation had, at the top level, which is called Diamond, we yet have to see a single default, on that. So, and you underpin that with an education program, because, even though we think our customers know our products and know how it works, and know, they don't. They honestly don't. CEOs of companies get confused when they look at their bank statement. They don't understand what the bank is talking about. It's in our interest to educate consumers all the way through. That's the one example. The second example I want to mention is when I was working at Time and we built Time, it was, at that point in time, it was owned by Commonwealth Bank of Australia, which was, it's a very big bank in Australia. They have a program which they've been running for 30 or 40 years, where they sponsor financial education at the school level. Now you may ask, why do they do that? Interesting stat. 55% of Australians have or had a CBA account. literally everybody when they leave school opens an account of CBA. Now the two things is, I mean, obviously you don't educate at a national school level to say, come open a CBA account, but the association of is so powerful that, you know, I mean, so it makes good business sense to invest in educating people. It's not just a, you know, something you give away for, because there's actually a natural flow of account origination and future customers coming from it. So I think the answer to your question about who should do it, you know, I mean, there's an opportunity for business to do it. If you do it in the right way, it comes back to you tenfold. I don't think we should sit back. We should embrace it and go out and do it.
Sorry, Darren, we have to wrap it up. We're running very late. If you'd want to chat to Darren afterwards about his opinions on this, I think that'd be great. But thank you, everyone involved today, our panelists, our audience, and our hosts. It was really nice moderating this panel.
Thank you.